Welcome back to another episode of Coffee and Coin. I have Sarah B. L. on the pod with me today. Welcome, Sarah.
Thank you. Thank you for having me.
I always ask people for a first name and last initial, and you gave two. So you're a very special Sarah, and I'm happy to have you here because we at Factora have an incredible Slack community, and one of my favorite channels inside of it is called the Money Wins channel. And Sarah's money win is that she has paid off 25% of her mortgage in just 2 years. She had a goal to do this in 5, but she's very ahead of schedule. And since a home is typically a person's largest expense in their lifetime, maybe besides taxes, but that happens throughout and it's a little bit more invisible, I wanted to share the steps that she took to do this and why she even did this. And just, a little hint to keep you listening. She's already saved herself $50,000 on interest across the life of her mortgage. And I have a feeling if she keeps at this rate, it's going to be even more savings down the road. So it's just so incredible what you've done. And Sarah, welcome to the pod.
Thank you. And once again, thank you for having me. I'm excited to be here. I'm really enjoying my experience with Factora and especially the Slack tech. I love watching everyone's wins and advice. And it's just a great little environment. So
it is fun. I've had so many women tell me that they like to pull up the Money Wins channel, like if they go get a cocktail with a friend, because they're just inspired by what other people are doing. And I feel the exact same way. So, okay, tell me a little bit about yourself. Where are you calling in from before we get into your story?
Yeah, so I'm from right outside of Cincinnati, Ohio. We moved out of the city a few years ago. We live in North Bend, which is just a small town on a river. I was born in Cincinnati, been here most of my life. My husband is not a native. He is from Mexico, but he's been here for quite a while as well. And we live kind of in a smaller town environment, which is what we were kind of aiming for. We wanted to get out of the city and away from the bustle. I work from home, so it's kind of thing I can do anywhere, which is nice. And yeah.
I also happen to know you have interests in dogs and history. I think you have a grown adult son. And what do you do for a living? And if you don't mind, share your salary. We love numbers here.
Yes. So I actually am a talent acquisition manager for a software firm in Silicon Valley. We do product lifecycle management software, which is kind of just helping companies get their products on the shelf, basically. I've been there a little over 2 years. I started as a talent acquisition partner and moved up. And right now I'm at 100,000 base with a 10K bonus, which is very nice in Cincinnati. It's nice with our low cost of living here. And yeah, I do have a grown son. He is 21, so he knows everything. And he's teaching me things. And yeah, we have 3 rescue dogs. They're older, very lazy, very, very content with their life, and a lot of fun.
I would love a lazy dog. I have a 110-pound raring to go bag of muscles that bothers me all day long for walks, which is good, but also I can't wait till he's more tired.
Yes, it's fun. We got him as they were babies, so it's been a journey. As I get older, they get older, and we're kind of lazy together now, so it's nice.
So sweet. Well, okay, we are here to talk about how you did this incredible feat of knocking 25% off of your mortgage loan in just 2 years when your goal was 5. So can you maybe take me back a little bit? How did you even get into real estate? Is this your first home? Like, how did we get to where we are today?
Yeah, so this is actually my second home. Our first home that we bought was a complete disaster. It was literally, we paid $30,000 for it. So that tells you the kind of shape it was in. Rehabbed that one. And since I didn't have a mortgage on that one, we decided to keep it as a rental property. We didn't want to get rid of it. We put a lot of our heart into it, just not just money and time, but a lot of good memories. We were there for over 7 years. So, just a lot of good memories there. We didn't want to get rid of it. So we actually rent that one out to friends, which is nice. I generally try to stay away from business and friends, but this is actually working out very well. So when we decided to move out of the city, first of all, we needed somewhere bigger. My sister was living with us, and we just needed a bigger spot. It was a 2-bedroom, and it was just, I didn't have an office. I didn't have anywhere to work. So we started looking for properties, fell in love with this one. It was not really kind of planned that we would move out of the city right then, but we just fell in love with the house. So we put an offer in, and of course it was in the middle of the pandemic. So it was above asking price. And I hated that, but I really wanted the house. There were like, I think 22 offers on it. We got lucky. So literally just got lucky, I think. But we went into it with an FHA loan, 3% down. And that really kind of made me uncomfortable. I lived through 2008, the housing crisis. I lived through that. I remember it. I remember people losing their houses, and it just kind of, I didn't want all of that hanging over me. I didn't want to become underwater. I didn't want my mortgage to be worth more than my house. And I knew buying in the middle of the pandemic, I knew eventually it was going to kind of cool down a little bit. So that was kind of my thought process behind trying to pay it off as quick as possible.
So, okay, I want to dig into a few things. First, tell me how much this house was and how much you got a mortgage for.
Yeah, so the house was $192, and we got a mortgage for $187, I believe. I'm not entirely sure the numbers. Whatever 3% down was, we only put the 3% down.
And then tell me a little bit more about that. Like 3% down, FHA loan. That's not as typical as you hear on homes. So why that choice, and what did that mean?
Yeah, so basically that choice was because we didn't want to not have a cushion if something should go wrong. The house is older. It's 110 years old. So we wanted to have a little bit of a cushion in case, the furnace went out, and we did, like, as soon as we moved in, we had to replace the roof. So we didn't want to not have money for that. And not selling our old house, we didn't have a huge amount to work with. Had we sold the old house, we would have had, $150,000 deposit, but we didn't want to do that. We wanted to keep it as a rental property. So the FHA loan was kind of it made the most sense, being the 3% down. We didn't have to put a lot down. One thing I don't like about the FHA, we do have to have the private mortgage insurance, which is not great, but we kind of weighed the pros and cons and decided that it was still kind of better in the long run for us, knowing that we would try to pay it off early.
Okay, just to share with listeners what the private mortgage insurance is, that's actually what Sarah's talking about, that came as a result from the 2008 housing crisis. Basically, if you don't put 20% down on a house, you get this, what's called PMI. It's an additional cost. It's basically an insurance. And I find it to be really unfortunate because it's like an extra layer on top of all the layers that it costs to even become a homeowner. But help me understand, with FHA, can you not take that off after 20% is paid down?
Not any longer. And they kind of changed the name for it. It's not PMI anymore. I think it's like MIP or something. But you used to be able to, after you paid it down to 20%, where you only owed 80%, you could take it off, but they don't do that anymore.
And do you know if that's specific to just FHAs, or?
I think it is. I think it's just FHA.
Which makes sense because they're letting you put a lot less down, but then they're saying you have to keep this component throughout the life of the mortgage. Okay, so you ran the numbers, you decided to do 3% down, use an FHA loan for $187 and change, and then tell me how you concocted this plan of wanting to pay off a portion of your mortgage. Or I think you wanted to pay off your whole mortgage faster than the 30-year timeline.
Yeah, so I'm still hoping to have the whole thing paid off within 10 years, if not sooner. It's a really strong goal for us. We want to go into retirement. We're in our 40s, so we want to go into retirement with no debt. We want to be able to, when we do sell this house and move, we want to be able to sell it and use that money for retirement along with our retirement instead of having to pay off a mortgage. So I knew going into buying the house that I didn't want to have a big loan over my head. And I talked to my husband. In Mexico, it's not really as common to take out mortgages. They tend to pay with cash for everything. So he was very on board with, yes, let's get this get it off of our shoulders as quick as possible. And I had seen, Dave Ramsey, and I had seen, other financial gurus, whatever you want to call them, talking about good debt and bad debt. And we knew that, we did want this house, we did want to live here, but we didn't want to rely on debt for 30 years to make it happen.
Yeah, I think that it's such a good point because a lot of people get 30-year fixed loans, and while expanding the length of time on your loan allows the monthly payments to be less, it actually still adds a lot of interest over the life of the loan. And if you're buying a house I just bought a house at 35. You add 30 years to that. I'm 65. I want to be retired before that. So I don't want to be paying my mortgage in retirement, which I think you and your husband got really strategic about. So, okay. So you decided you wanted to pay it off early, and then tell us how you got 25% done in 2 years.
Yeah. So one of the first things I did, I had seen an article about bi-monthly mortgage payments. I didn't really know anything about it at the time. So I kind of dug into it, did some research, and realized that one, by making bi-monthly mortgage payments, you're actually making 2 additional payments a year, because not every month is exactly 2 weeks. So that was a big contribution to that. Over the life of the loan, it'll result in about $30,000 savings, according to the calculator that I used. So that was the first thing I did. I called my mortgage company and set that up to where it automatically takes out every 2 weeks out of my bank account. And I got a little bit of a discount for that as well, which I didn't really factor in any of my things. But and then we just got really, really focused. Every time I would have like a refund check, a tax refund, or I got a $3,000 check for losing my train of thought. Sorry. I got like a $3,000 check for a writing piece that I did. Things like that. I would send it automatically to my mortgage company. I also set myself a grocery budget of $150. And anytime I wouldn't hit that, I would send the remainder. So if I only spent $100 in groceries, I would send the remainder in with my bank account, into my mortgage company. And one thing I like about our mortgage company is they'll let you make a payment of any size. It doesn't matter. I can send them $2. I can send them $200,000, and they're fine with it. So anytime I had anything additional, it would go directly to the mortgage company. And that took a big chunk off of it as well.
Yeah. I mean, this is amazing because even just hearing you talk about every time you get some sort of surplus money from a different job, activity, or a refund, or you just don't even spend the entirety of your grocery bill, all of that leftover is getting prioritized to reduce your mortgage. The reason I love wealth building and financial goals so much is because anyone can pick a goal. This one's yours, and you are attacking it so well. So I know a lot of people do the same thing, but with the stock market, right? They're like, I want to get as much money into the stock market as possible. So I'm going to live off, let's say they have a base salary, and then every commission check is going straight into that stock market goal to get those accounts filled while you're trying to get your debt reduced. And it's just, everyone has a different plan, and yours is so clear. Can I ask, what is the APR on your mortgage loan?
It's actually pretty low. People are usually surprised. It's 3%. We kind of caught that tail end of the nice low rates. So that was another thing we kind of struggled with. Do we really want to pay this off, or do we want to put that money into savings or put that money into investing? One thing that we do max out our 401k, max out our IRA before we do that. That was really important to us to have that security. I'm sure you can tell we're all about security. We want to make sure that we're secure. But yeah, it was a low rate, 3%, but it was still, to us, made sense to kind of pay it off early. And then as we get, when we don't have a mortgage, that'll give us more to invest as well. So we're not ignoring our investing. We're not ignoring our retirement. We're just trying to really
prioritize this goal.
Yeah. Exactly.
Yeah. And I have no doubt you are. This is exactly why I was kind of sharing it in that way. I think that, so we were very fortunate to get in the 3% too for this house. We wanted to buy a house that is way less than we could afford. We could afford way more. We got approved for way more. But I think sometimes what can happen is people think, oh, if I can buy a house, up to $1 million, then I'll buy $1 million house. And we're like, no. We're going to buy a $600,000 house and make sure that our mortgage payments are really affordable to us, so the rest of that can go into our investing. But yes, there are so many articles online that show you, even if you were to make one extra payment a year, you're cutting off some years from the life of your loan. You're just like taking a jolt out of that big chunk of interest you're going to pay for your house, because, everyone remembers the amount that they bought the house for, but that's not really what you're buying the house for in the end. That was the sales price the day that you closed and got a mortgage. That mortgage is going to cost you a lot more over those 30 years because it's tipped in the favor of interest first and principal later. The other thing I wanted to mention about your story is your service provider does seem really great. Everyone's got different mortgage service providers, and oftentimes something that's happened to us, we've bought a number of houses, they then repackage your mortgage and sell it to someone else. So one service provider that was letting you do really easy automated stuff now is old school and wants a check, or they'll only let you send something on their online portal once a month. And if you want to do anything addition, they make it difficult and you have to send a check beyond that. So that's amazing that you have a service provider that is open to this. I personally think it should be federally regulated that all service providers have online quality portals that allow automatic payments for as much as the customer wants to pay off their debt and as quickly as they want to do it. Unfortunately, that's not the case right now, but maybe someone will hear my cry and get to that, because I do think that the amount of outstanding mortgage debts on people's head is a really heavy weight, even if they can't see it. It's like this mental burden, right? And that's something you and your husband didn't want, you discussed, and you made a plan for. So let's talk about what your mortgage is at now. What's the number?
It is $148,632.57. As of this morning, I checked it.
You knew I was going to ask. I love that you had it down to the dollar.
Yes.
Okay. So basically you knocked a $200,000 loan down $50,000 in 2 years just from sending, the $80 left from your weekly grocery budget that didn't get spent, and a few K here and $15 there. And I love that you said you've done as little as like $15. I mean, I think about this all the time. Again, just another stock market example, but for people who, let's say you love Starbucks, I'm like, go ahead, buy the matcha at Starbucks, but then put $5 into a Starbucks investment. You know what I mean? Like, if you actually care about that brand, buy that brand. Like, that's how you can actually get paid back for your choices. Okay. So did I miss anything when it came to the why and the how of doing this awesome mortgage reduction?
We did also make extra payments. I just tacked on a little bit extra each payment above and beyond. I think our principal is like $1,070-ish a month, and I just rounded up and added a little bit extra too, just for the fun of it. I figured I wouldn't see it, I wouldn't miss it, and I don't. It doesn't make any difference in our budget whatsoever. So,
how much did you round up to? So 1,070 went up to 1,100, or how much extra?
I think it's about $200.
I love it. Yeah. No, it's great. I mean, if you just say that this is the bill, you always pay the bill, right?
Yeah.
And so you can just, intentionally say, I'm paying $115 more, and do that on a monthly basis, or like Sarah's doing, on a bi-monthly basis, and in between those days as well.
Yeah. And it's all automated. That helps too. I think if I had to every month go in and do it, it would be a little more difficult, but it is automated. It comes out automatically. I don't have to worry that I'm going to, spend that money on something else, because it's gone. So if it's not there, I don't have to worry about it.
I love it. So I know your initial goal was to do this in 5 years, and you did this in 2. Is that what's making your bigger goal to get the whole house paid off in 10?
Yeah, I think so. I mean, I thought it would be harder than it was. I don't mean to downplay it, but I literally thought that, it would be a little more difficult, but you kind of get really excited as you see it coming down, and it gets more and more exciting to send that extra $10 or to send that extra $100 or that birthday money or whatever it is. And it gets to the point where it's it kind of automatic to me now to, when I get extra money, push it into the mortgage, not think about it. So yeah, I'm just really excited to get it paid for, get it out of the way, not have to worry about it anymore. And watching it come down was really motivating to keep going and get it paid down and as quick as possible.
For sure. And by my very quick brain calculations, you'll definitely be able to get this done within 10 years. Because if you knocked off about 50 and a little over two,
Yes.
246 to get the last 350Ks done, and you'll be well on your way. So that's really awesome. Thank you for sharing all that with me. And I also realized that you're in the current spring wealth circle. Yes. So I guess I just wanted to ask, have you had any aha moments, or do you want to share anything about your experience?
Yeah, it's been really exciting. I've never really talked about money. We didn't have it growing up, so it wasn't something to talk about it. But it's really great to talk to these women and understand that I'm not the only one dealing with issues. I'm not the only one who maybe, I do know about the stock market, but maybe I don't know as much as I think I know. And there's always more to learn. I loved learning about the tax advantaged kind of ways to prioritize how you're investing your money. Like I said, we do invest. We have always tried to kind of push for retirement because we started late, but really it was just, I think my favorite part is the online, when we're all together online and everybody's talking, everybody's really honest, and seeing that there are people who make 10 times as much as I do that have nothing in savings. And then there's people who make less than me who are way ahead of me, and just realizing that we're all on this path, but everybody's path looks different, and that's okay. And then learning too that I did start late, but that doesn't have to mean I'm going to finish behind. That was always, I was always really scared. I was a single mom until I met my husband, and just knowing that I'm in starting later, I do have to work harder, but it's nowhere near impossible like I thought it was.
I love what you just shared so much, because I'm so annoying with how often I say personal finance is just that. It's personal. But I think if I were to boil down what you just said to a statement, it would be, it doesn't matter how much you make. It matters how much you keep and put to work for you, and that you do it in the way that makes sense for your life, because it's really personal, right? Yes. You and your husband want to pay off your house, use your current house and your rental to cash out and make your money go further in Mexico for retirement. And that's so different than someone else's story who is currently in the wealth circle. So all being able to share what we're doing with our money and why it's just so nice to hear from other people, because this does end up, or it's typically been a topic that's so, in the trunk, just closed. We're not going there. And recently in our society, it's become a lot more prevalent to share how much you make, because that's more available online. You could literally look up, if you want to know what your best friend makes, you could get her title, her amount of years of experience, and her company name, and put it into payscale.com and find out a range. Like, you pretty much know. But to your point about sitting in a room talking with women who might make way more, but have a much lower net worth, which was my story initially, or make way less and have a higher net worth because they've been doing things along the way, little things like you're doing, $15 extra to the mortgage company to reduce debt, which allows your net worth to grow. It's just really amazing. So if you had any advice for someone who's listening who is just starting their personal finance journey?
Just get started. Just don't be afraid to, learn new things, try new things. You're going to mess up. I messed up. You're going to mess up. There's going to be times when the market goes up, times when the market goes down, times when housing prices are insane, times when you can buy a house for $30,000. But it's just really important just to get started and make sure that you're doing something, and to realize that it's not too late to start, because it can be scary being older and starting and knowing that you aren't where you want to be, but just make a plan and get there, and don't be afraid to ask for help. Everybody that I have talked to has been amazing, both in the wealth circle and even, my bankers, just anybody. Once you start talking to people, people are always really willing to help and give advice, and then just get started.
I love it. Well, one last question. This is a new question I'm starting to ask on the podcast, but I think it's fun. So if a anonymous $50,000 was to deposit into your checking account tomorrow, and you don't know where it came from, so you cannot return it, what would you do with that money?
Oh, that is fun. So probably about 40,000 of it would go right to that mortgage. And then I would like to take my mother somewhere fun on vacation. She doesn't get out enough. So I think it'd be fun to maybe go to Europe or somewhere that she probably wouldn't spring for, and just have some fun time with my mom.
I love that. I always say, use your money on your values, and y'all heard it here first. Sarah's value is to get this house paid off.
Yes.
And then do a little enjoying with her family. So thanks again for coming on and sharing your incredible money win. I'll see you in Slack.
Thank you. It's fun.